My name is Jennifer Henniger. I'm the Vice President of Financial Wellbeing for First United Bank. And today we're going to be talking about money potholes and 10 things that you need to avoid along the way so that you can become financially independent. And who doesn't want to become financially independent? I know we all do. I have with me today here Justin Young. And Justin, just tell them a little bit about yourself, what you do for First United, and what you have in common with them. Well, I'm a financial coach, and I do workshops like this. So I get the best job at First United. So I get to work with people and help them make their finances and to learn about avoiding the potholes so that you don't make any financial mistakes. Okay, so here's what I want you to do. You have in your packet, if you open your folder, there's a little sticky. So take your little sticky note, and I want you to come up with one thing that you would tell someone to not do. Say like, avoid doing this so that you can become financially independent. So don't do this and it'll help you to be able to become financially independent. So what's a mistake you would tell them to avoid? We're going to figure that out. When you're done writing down your one thing, I want you to stand up so I'll know that you're ready to move on. Now Justin's going to tell us what are some things that we should consider avoiding based on some of the expertise in this room today.
Avoid taking too many student loans.
Oh, very true. I would tell somebody to do that for sure.
Don't spend impulsively.
Oh, for real? Do not spend impulsively.
Don't waste your money. Don't go into debt.
Don't waste money and do not go into debt.
Do not overextend your monthly budget.
For sure. Make sure your budget is within intact. If you overextend, you're going to be in debt.
Learn the difference between true needs and wants so you don't create unnecessary debt.
Somebody must have looked at my presentation. So it's learning about needs versus wants. And what was the other one?
We got a Dave Ramsey fan. Don't use credit cards.
Hey, he learned about Dave Ramsey today. And so somebody says do not use credit cards. And I would say if you do use a credit card, make sure you can pay it off that month in full. So that's how you know you're living within your means. So thank y'all for doing that. All right, so now we are going to talk about, here's what you're going to learn today, folks. So here is what it's going to be about. After this workshop, you're going to be able to recognize the 10 most common money traps. That's really a big part of what this presentation's about, the first part. So there's different money traps, and we're going to go over those. Determine wants versus needs. Somebody already mentioned that. And then create a spending plan. You're going to know where you can go to do that and the steps you need to take to create a spending plan. And you're going to understand the value of budgeting. And by the way, I use budgeting and spending plan interchangeably because doesn't spending plan sound a lot more exciting than a budget? Because if I say, hey, let's go do a budget, what are you thinking? Exactly. That was a great noise. And now if I say, hey, let's go work on a spending plan, what are you thinking? Cha-ching, yeah, we can spend some money. Hey, let's go do it. So I think of a spending plan as it gives me permission to spend, and I know exactly what it is I have available to spend without overextending myself so that I don't go into debt. So that's what we're going to be focusing on today. All right, will somebody read that slide, the title?
How much money is enough?
Yes, that's a great question because in life we may be wondering how much money do I really need to make, especially when you're in college and you're looking for what career path you want to take. A lot of us, we may choose a career path based upon how much money it's going to pay, or some of us may choose a career path because it's what we're passionate about and it's what we just want to do and hope that the money will just happen naturally. So here's what we're going to be talking about. What are some of the expenses that you are faced with paying each month? And Justin's going to actually jot some of those down. So I just want y'all to say, what are some expenses that you personally have to pay every month? And just shout it out so he can write it on the chart. Housing for April. Okay, what do you have to pay, Brittany? Every month?
Food.
For food, yes, because we got to eat. So what do you have to pay for every month, Larissa? Car payments, yes. What do you have to pay for monthly, Emma? A phone, yes. Who in here has a cell phone? Does anybody get it for free? If so, I want to be on your plan. Anyway, no. So what are some other things? Anyone else that you can think of that you spend money on every month? How about you, Courtney? What do you spend money on?
Food for pets.
Pet food. That's an important one. We want to make sure our pets can eat.
And vet bills. Fuel. Yeah, and vet bills.
Vet bills. Oh, yes. What was the other one? Fuel? Oh, that's a good one. Fuel. Because we get, what was it? Electricity, yes. So we had food and electricity and housing and car payments. What else do we have to have if we have a car?
Insurance.
Yes, so we got to have those insurance payments. Sometimes we pay them every 6 months. Some people pay them every quarter. Some people pay them monthly. So it just really depends on how you put it into your monthly plan. So here are some common expenses that college students are faced with every month. They're faced with the cost of attending school. They're faced with a cell phone, which, hey, somebody already nailed that one. Cable TV. Does anyone here do cable? Netflix? Redbox? So what do y'all do in lieu of, I want to hear, what do y'all do in lieu of cable?
I think we just pay for Wi-Fi and use like Hulu.
Hulu, okay.
They even have like Fire Sticks now.
Fire Sticks, yeah, the Amazon Fire Stick. If you have good high-speed internet, that's a great thing. Where I live, we don't even have that option. So. Oh, hey, even better, unlimited. I like that. Okay, so entertainment. Does anyone ever do anything fun other than go to school? I know school is so much fun. Coming to these workshops, this is a lot of entertainment, I know. This is cool stuff, folks. Clothes. Does anyone buy clothes in a month? New clothes ever? No? We've got Larissa who buys clothes over here. And then we got food, and then transportation. We talked about that. So if you don't have a car payment, what other type of transportation might you have to pay for Durant, Oklahoma? In the area? What?
Public transportation.
Yes, the public transportation, yeah. So some people may do that instead because maybe they don't have a car or they don't want the expense of owning a car. If we lived in New York City, what kind of expense might we have for transportation?
Bus.
A bus. What else?
Bike.
Subway, what was it? Taxi, yes. So it just really depends on where you live at based upon your monthly expenses. So these are all things that we have to take into account whenever we're thinking of how much money is enough each month. And I always recommend that when you're looking at your career that you're going to be in, make sure you know what it's going to pay, because when it comes to taking out student loans, I always tell people make sure that the total amount of your student loans does not equal more than your first year's salary, because otherwise you're going to be overextended potentially, and that is not a good place to start off in your career. Okay, there's going to be some money traps that we may find ourselves in, and what I'm going to have you do is I'm going to get you in groups. I'm going to have one of you come and join the ladies over here. Who wants to come and join these two ladies, Courtney and Brittany? Okay, thank you, Larissa. Okay, cool. So you're going to come and join them, and what we're going to do is in your groups, you're going to list as many money traps that y'all can think of. You have paper there, just list out your money traps, and I want you to list as many of your money traps that you can think of. And when I talk about money traps, let me be very clear. I'm not talking about like fraud or scams, things of that nature. What I'm talking about is things like payday loans. To me, that's a money trap because it's something that you're going to be paying for a very long time that can just really suck you in and take your money away. And it doesn't seem like it's going to cost a lot, but then when you start looking at it, you're like, oh my gosh, this is so expensive. So that's a money trap. So in your group, I'm going to give you all about 2 minutes, and I want y'all just to write on a sheet of paper in your group the money traps that you can find. So let's just talk out loud. Tell us what y'all's group, y'all just take turns and say, what's one thing that y'all came up with at the back? What did y'all come up with as what you think could be a potential money trap? Going out to eat? Yeah, because it could really suck our money away, for sure. What's a money trap y'all could think of? Credit cards, yes, they could be a money trap for sure, because if we don't start paying them off every month, then we can go into debt. So what's another one y'all had? Timeshares. Oh, that's a great one. Good job. Yes. I actually have been, my husband watched these old Western shows, and it'll come up about, hey, get out of your timeshare. So I think that's a good one, because it is a big thing, because people get into timeshares and then they found out how expensive they are to maintain them. Okay, so what was another one y'all came up with?
Like monthly clubs where you pay for something for the
Random,
month.
like a random box of stuff.
Yes.
You don't know what you're getting.
It makes me think of, this will date me a little bit, y'all, but they used to have where you would get your cassette tapes in the mail, and they would send you the cassette of the month based upon the music that you like. Yeah.
And you start that club with a penny.
Yes, and then the next thing you know, you get this bill, and you're like, oh my gosh, I owe them $40 for a couple of cassette tapes. So, yes, so these are good ones.
Fitness facilities, that would be a lot of people.
For some of us, it could be a money trap, a fitness facility, because we don't go there that often to get our money's worth. And did y'all have some more? Girls, did y'all come up with any more? Y'all had one more? High interest loans, absolutely. And that's exactly what we're going to be talking about, is some of those high interest loans. Okay, so you can go back to your normal seating space. So here we're going to start talking about our first money trap. So here's a picture of Mr. Uncle Sam, y'all. And Uncle Sam is everyone's relative, right? Because guess what? He is going to get his money no matter what. This is the IRS we're talking about here. So how many of you have completed a W-4 recently? A W-4 is where you go and you get a job, and on the W-4 form you tell them how much you're going to withhold from taxes out of your paycheck based upon your dependents. So we have one. Show anybody else who's had a W-4? Okay. Well, one of the most common money potholes involves the decision to get a really big tax refund at the end of the year and not have money at your disposal throughout the year. So a lot of people will do this. They'll have like a whole bunch of taxes, so then at the end of the year they get a big tax refund. But I have a question for you. Does Uncle Sam pay interest on the money that he keeps during the year, so that when you get that tax refund, do you earn interest on it? No, you're right, you don't. Many people, they get confused and they think that Uncle Sam is giving them a big tax refund, when in fact, Uncle Sam is really just giving them back their money that they've already overpaid in, that they could have been getting in their paycheck throughout the year. So I would really encourage you, anytime you do a W-4 form, to really go in there and answer the questions that determines how much you should be claiming for your deductions, so that you're getting the proper amount of taxes withheld, so that you're not paying in too much. Because it really doesn't benefit you to let them hold your money. Instead, you could have that money and be putting it into savings or be using it throughout the year so that you won't have to borrow money. So that is one money trap that a lot of people don't think about. And here's one that a lot of people do. Does anyone know what a tax refund anticipation loan is? Has anybody even heard of a tax refund anticipation loan? You think?
Is that like the advance that they try to give you before your taxes actually get back?
You got it. So it's where they try to advance the money. And here's the thing is, they have a good idea of what they think you're going to get back on taxes, but there could be something that could change. So you could actually take out the loan thinking that you're going to get that tax money back, and then maybe something might not be correct. Then you may not get that amount, so you have to pay for money that you've already borrowed, and you may not have enough to pay it back either. So I would like to warn you that be cautious of tax refund anticipation loans. It's just a way to get your money faster, is all it is, before your tax refund, instead of waiting. And nowadays, I mean, really, it takes like about a month to get a tax refund. It's pretty fast. So I would really encourage you to be cautious and avoid tax refund anticipation loans. Okay, let's talk about our next one. These are things to know. By a show of hands in this room, who has a credit card? I have to raise my hand. I have a credit card. So we have 3 of us in the room that have a credit card. And there's no shame in it, folks, as long, it's not a bad thing. So credit card companies, since some of you may not have a credit card, you don't know this, but did you know that credit card companies will actually send from time to time checks in the mail? And these checks say, hey, you can pay off higher interest rate debt, you can write yourself a check and have some money, and basically it's a cash advance. And so you get these free checks in the mail and you read it and you think, I could pay this off. But you always need to read the fine print. And here's why. Because with a with a check that is a credit card check, a cash advance is what it is, you are actually, the minute that you write the check and it hits the bank on them, you start paying interest that date. And the interest rate's higher, and there's usually like a 3% fee that they charge in addition to paying interest immediately. So a lot of times, like with your credit card, you have a time where you could use the card, and then if you pay it back in full, you don't have to pay interest. It's not that way whenever you're using cash advance checks, because once that check clears and they pay it, you're going to start paying interest, plus you have to pay the fee, which is going to be a percentage of that amount. So always be cautious. Don't get super excited when you get that check and they send it and it's January 1st and Christmas has happened and you're like, wow, money's a little tight. I could use this cash advance check, write a check to myself, put it in my checking account, and go and have some money. But instead, it's going to cost you quite a bit of money to do that. So make sure that you read the fine print and understand what it is before you do it, because those checks are not free checks. So has anyone in here ever watched the television show, reality TV show, Pawn Stars? Anyone? So we've got some Pawn Star people in here. So does anyone know from the show Pawn Stars the guy Chumley? Is Chumley your bud? He could be your bud. He seems like pretty likable and funny, right? So for those who haven't seen Pawn Stars, can someone tell them who Chumley is real fast, just so they know? Who's a Pawn Star person in here? Have you seen it, Dylan?
No.
You haven't? Can y'all tell them?
We've kind of seen it. We haven't watched a lot of episodes or anything.
So how about you? Have you, Larissa? Can you tell them who Chumley is?
He was like one of the what you go in to make deals with about him turning into the pawn shop.
So he worked for the pawn shop there in Las Vegas, and he would make deals with him. And he was like the one who was just funny, and he would try to make all the goofy deals. And so, but in reality, when you go to a pawn shop, has anybody ever used a pawn shop? I mean, no shame. I mean, I've gone with a friend before, and I've seen pawn shops and gone in, and we've done pawn shopping before, where you take in something and you try to get some money for it. So here's how a pawn shop actually works. Let's say that you have your grandmother's wedding ring, and let's face it, you're just not going to wear it, but you want to keep it. But right now, money's tight that month, and you need to go to a pawn shop, and you're going to see what they'll give you as a loan on it. So let's say your grandmother's ring is valued at $300. And guess what? They're going to give you $30 for that $300 value ring. They're giving you basically 10% of the value. And the pawn shop says, hey, we're going to charge you a $6 fee, plus you got to pay back the $30. Oh, and there's going to be some interest too. Let's just say that the interest is 60 cents. So you've got to give them $36.60 to get your grandmother's ring back. But guess what? If you don't pay for that ring after that time frame that you've agreed to and you've signed on to get that cash that day, what happens to your ring? Do you think you can go back and get it right then? Nope. The pawn shop gets it and they get to sell it. So they've loaned you money, so they've got a ring that's valued at $300 that they've given you $30 for, and if you can't pay the interest and keep the pawn shop interest paid up or pay the amount in full back, then they get to keep the ring. So who in here is, oh, and here's the important thing. While $6.60 doesn't sound like a lot, calculate that on an annual percentage rate so you get a true idea of what it is that you're paying. It is expensive, way more than even a credit card could even be. So $6.66 doesn't sound like a lot, but that's for 30 days. So you have to start looking at that over a year, and you'll get the annual percentage rate on it. So who in here is familiar with payday loans? Anyone? Ever? So we have one person who's familiar with payday loans. Okay, let's talk a little bit about this money trap. So payday loans, they're readily available. You see them popping up everywhere. So when you think of a payday loan, they're just sprouting up in communities, and they really like rural area communities, like really small towns, because that's where people don't always have resources as easily available to them. So do you think you can get a payday loan from a bank? Anyone? Just take a guess. Do you think you could get a payday loan from a bank? Actually, you used to couldn't. First United doesn't do payday loans. I want to be very clear. But there are some large commercial banks now that have actually gotten into the game. However, they call their service something different. They don't call it a payday loan. So here's what you would hear it called: direct deposit advance. So they know that your paycheck's coming in, and they're going to let you take out a loan using your paycheck, and they're going to take the money out then. That's the same thing as a payday loan. So with a payday loan, you need money today. They are guaranteeing it based off of your paycheck, what they'll loan to you. And by the way, do you think you can not pay back a payday loan? Anyone? You think you can't not pay it back? You can not pay it back, but guess what? They do garnishment. And your paycheck is what guaranteed the loan. So know that the paycheck that you were using to guarantee that loan is actually going to be something that is going to make sure they're going to pay it back. And they can garnish your wages. So know that it is something that you have to pay back. Now, if you aren't working, then it would just go against your credit. But typically, you're working because it's a payday loan. And you're going to be paying a really high interest rate. Let's just talk about that. So let's say you want to go in and get a payday loan. The minimum amount they'll do is $100. The maximum is $500. Some payday loans go even higher now. This is just the typical. And the average loan term is about 2 weeks because people usually get paid every 2 weeks or so. So that's about the time because they want to do it by your pay period and they want you to pay it back when you get your paycheck. The finance charge on this payday loan would be anywhere from $15 to $30 to borrow $100. And for some people, they're like, I'm borrowing $100. I'll pay them back $130. $30 may not sound like a lot, but when you look at that annual percentage rate, you're paying around 400% interest on a payday loan. I mean, this is just for a 2-week time frame, and then you do that on an annual basis. It is ridiculous, and people get caught up in these because they can't ever get them paid back. So what they'll have to do is in 2 weeks, if you can't pay it back, you go in, you pay the fee, you pay the interest, and you have to renew it. And then it just keeps going and going and going, and then eventually you've paid them quite a bit of money because they're not doing this as a nice service. They're doing it because they're making money off of it. One of the things I wanted to tell you about is on our we have a website. It's called spendlifewisely.com, so write that down because right now, does anyone want an extra $100? You think you could use an extra $100 right now? Because right now, First United, we have on our Spend Life Wisely website, we have these modules that are education modules, and they're free, and it's through the company called Everify. If you complete 3 modules, you will be entered into a drawing to win a $100 gift card. We're giving out 3 in the month of October. Then we're giving out 2 every month after that through June. And nobody knows about this other than you and Grayson College today. Y'all are the only people we've told. So your odds of winning are really high. Justin, you can enter too, because even employees have the opportunity to win. And it takes like 5 minutes or less to complete one of those modules. So I really want to encourage you to go take 3 of those modules and get entered into the drawing starting October 1st. So literally, that's coming right up, and that's a way for you to get an extra $100. And the reason I'm telling you about this is there's a module out there about payday loans. It's like 2 minutes, folks, maybe 3 minutes, and it just kind of goes over it, what we're talking about. And you can watch it very quickly, and that could be one of your 3 videos. So check it out. I want you to win. I just know you can do it. So just like pawn shop rates, the payday loans, they don't appear to be such a big deal. So if you had to decide, which would you do? Do you think it would be safer to do a payday loan, or do you think it would be safer to do a pawn shop? If you had to decide, just somebody say what you would do and why. Anyone? Which one would you do if you had to do it? You didn't have any other options. Dylan?
Probably pawn shop.
Pawn shop? Okay. Because the worst bad thing is they get to keep what it is. Now, with your paycheck, they're going to get your paycheck. So that could be a pretty big deal. And they can garnish your wages.
Payday loan sounds like you can go on infinitely.
It can go on for a very long time. Pawn shop is going to end. It's going to end. It might be a rough ending. It's like ripping that Band-Aid off quick. So, okay. Let's look at a payday loan example in a little more detail. So, it's exactly what you said. Payday loans can go on infinitely. It can actually become a way of life versus a one-time quick fix, especially if it's actually a direct deposit advance, where the money goes in, then you're going to have to keep borrowing the money because you have to have money to live on. So if you look here, let's say that it's the month of February, and you need to borrow $200. And you go into the payday loan, they say, sure, we'll give you $200, and we're going to charge you $30. Well, guess what? March comes along, you need $100. So you go in, and they're going to charge you $50 this time. Well, guess what? March went by, and then June happens. In June, you need some money, so you go in and you borrow $200. Well, guess what? You got to pay $60 this time because you're going to go 2 weeks. Well, then August comes along, you borrow another $100, and now you're paying them $15. Then October comes, you borrow $400, you're paying them $60. Well, December happens, you borrow another $400, and that's $120 for 2 weeks. Well, guess what? You've borrowed $1,400 during this time frame, and you've paid them $300 in finance and interest charges. So paying $300 to get your income early is not the best financial strategy. Would y'all agree with that? And in this case, the interest rate would be 124%. That's what you would have been paying to have this $1,400, 124% interest. I'll loan you that. I'm happy to do it. Just kidding. I don't want to do that. But do you see why that they can make it? Because they're making a lot of money. So by a show of hands, how many of you in here have a bank account or a credit union account where you manage it for something? Okay. All right. So we're going to talk about now cashing your check. Why use a bank when you can cash your check at a check cashing place? Has anybody ever used a check cashing place? They have them. Like even in Walmart, you can go cash a check. Justin, he's done it.
I was just gonna say, in Texas, they have like in the Dallas or Arlington area, they have these things called PLS. Have you ever heard of it?
PLS?
Yeah, it's 24-hour check cashing.
Really?
Yeah, you can like send money through Western Union or whatever, but it's 24 hours.
Wow. So these places, of course, they make money too. So let's just talk about this. One of the advantages of having an account with either a bank or a credit union is the convenience and cost effectiveness of cashing checks. So like if you get a check, you can take it to your bank and you can cash it and not have to pay a check cashing fee, typically. Our bank doesn't charge that. So many young adults may think that operating on a cash-only basis is a great way to operate, and I'm not going to say that it's a bad way, but when it comes to cashing checks for any income that you earn, it can get expensive, especially if you have to go use a check cashing place. So let's just give you an example. So let's say you have a check and it's for $250. So somebody paid you, it's $250, and you say, okay, well, I'm going to go cash this at a check cashing place, and they're going to charge me a 5% fee. Again, 5% doesn't sound like a lot of money, but that's $12.50 of your hard-earned money. I mean, think about what people get paid an hour. Can you imagine $12.50 an hour and you're just giving an hour's worth of your wages to someone to cash your check? Not a very good idea. So if you to get cash in hand for that $250, you're going to have $237.50. And let's say you do that every 2 weeks. Over a year, you're going to have earned $12,500, and you're going to have paid $625 in fees. What could you do with an extra $625 in a year? Need some Christmas money? There you go. Don't go do check cashing. Okay. Oh, and this one. I love this one. Get rich quick. I want you to look at some of these things that are on here and tell me, have y'all seen any of these ever around any of the campuses? So people rarely, if ever, get rich quick. I mean, does anyone know anyone in this room who's gotten rich quick? Anybody? You know somebody?
Oh, no.
No? Okay. So I don't know anybody either, because if it sounds too good to be true, it usually is too good to be true. So if you look at the list here, we have weight loss miracle. You can refer your roommates and you can make money. You can work from dorm room easy and fast money. You can self-publish and make money, get paid money to shop till you drop. Ooh, that sounds like my kind of job right here, if I can get paid to shop till I drop. And all you need is a laptop and we'll pay you money. Has anybody ever seen any of these anywhere? You have? Okay. So these are the kinds of things that, hey, people will try to get you to think that it's easy money, that you're going to get rich quick, but it just doesn't happen. So watch out for these kinds of scams here. Who knows someone who has chosen to rent to own versus purchase something outright? Does anybody know anyone who's done rent to own before? I've got friends and family members that's done rent to own. Let's talk about rent to own a little bit, because this is another one of those money potholes. So college students can be perfect victims for rent to own because it just sounds so sensible at first, because you're like, hey, I can afford $15 a week or whatever for a refrigerator. I don't have the money right now to go get that. So imagine you arrive at college here at Southeastern, and no one has a big enough television to watch Justin on TV. He's going to be on TV playing football, and everybody wants to come watch him, and they want him on the big screen. So you say, hey, let's go to one of those rent-to-own places, and we'll just get it, and we'll rent it for a little bit, and then we'll just let it go back. By the way, that would go on your credit. Don't do that. And they may think that it's really not that costly, but let's just see what the cost really could be. So let's say it's a new television and it's $400 if you were to purchase it. But if you go to the rent-to-own place, they're going to, for 65 weeks, let you pay $15 a week. And that's $975, folks, for that $400 television. Then there's some sales tax, which you would have to pay sales tax no matter what. So you do the sales tax, but they're going to charge it by week because you're going to pay sales tax every time you're making a payment. So that's $48.75. Oh, and by the way, they're going to charge you a delivery fee too, possibly. So you got to add that into your cost. So the total cost of this rent-to-own TV, the $400 TV, is now going to cost you $1,033.75. Does that sound like a good deal? I've got some oceanfront property in Oklahoma. Teasing. I knew I could get you to smile, Dylan. Talking my George Strait here. Okay. Hey, has anyone ever seen a loan shark? Could you describe one? What does a loan shark look like? How would you describe it? I hear some silence in the room, and that's the good answer because they come in all different ways of looks, because there is no such thing as being able to identify a loan shark. So a loan shark are people who are in a position to take advantage of people and make money while they're doing it. Does anyone know of any kind of loan shark you might have heard of before? So I always think of it like, to me, when I think of a loan shark, this is like the mafia type stuff. It's kind of scary. It's not really mafia stuff. I'm just being funny. But it's the things that you're like, oh my gosh, these people are dangerous and they will not take no for an answer. If you borrow the money, you are going to pay the money back, folks. There is just no getting around it. So let's give you an example of what a loan shark would do. So let's say you need $1,000 and they're going to loan it to you and they're going to let you pay $130 a week for 10 weeks. So that's a 30% interest rate right there. So you're paying 30% for that $1,000. You're going to have repaid $1,300 back. And if you miss a payment, you still owe the $30 in interest, plus they're going to tack on what you owe for another week. There is a no default here, people. You must continue payments until the $1,000 is repaid. And the FBI advises loan sharks come in all sizes and shapes. Their only goal is to make money, usually using a no default loan. So these are the kinds of things that really are just bad decisions that we could potentially make in life that can really cost us a lot of money. All right, now we're going to talk about pawn shop title loans. So let's say you own a vehicle, you have the title to the vehicle, and you need money. So you think, I can use my car title, and they can loan me some money based on whatever they're willing to give me. They're going to hold the title of the vehicle, and they're going to loan you the money. So let's just use this example here. Your car's worth $5,000. So you go to a pawn shop, and they're going to do a car title loan, and they say, okay, yeah, we'll loan you $1,000. The pawn shop, again, they're keeping the title to the vehicle, and they're going to charge interest of 10% a month for 6 months. So that's $600 that they're going to charge you. And you're going to have to pay back $1,600 to get that $1,000. That is very expensive, folks. And in addition, they could charge you for storage fees, non-payment, and guess what? They're going to keep your vehicle. So if you decide that you just can't afford the payment, they keep your car. So you got $1,000 and they got $5,000 because they got the value of your vehicle. Does that sound like a good deal to y'all? No, absolutely. So who in here can tell me what are some ideas or suggestions that you would have to make sure that people can avoid these money traps that we just talked about? The pawn shops, the check cashing, the payday loans, the car title loans. What would y'all do? What would you tell people to be able to avoid these money potholes?
Tell them the deals are not as good as they seem.
And what if they say, oh, but I got to have the money. I don't have any other options.
Is there ways to go around it?
Yes. So what are some ways that we could go around it? What ideas do you have, anyone? So instead of doing one of these methods, what are some ideas we could offer up to people? Anybody have any suggestion? Manage your money better. Absolutely, Emma. You are so right. And so I would actually tell people, work really hard. Maybe you get another job. Do something that you might have a skill for. I mean, literally, I'm telling you, folks, if you ever see me waitressing, you'll know that times are hard at my house because before I go and have to do some of these things, I'll be out there serving food with a smile. So I say that because in all seriousness, you can get extra jobs, you can do extra duties, cut back on expenses, get rid of some of the wants, and really just try to get to a point where you can make it on what you earn. And can someone in here tell me what's the difference between a want and a need? Yes. And you know, there's a lot of things that don't really fall into that definition, right? So something that you can't live without, Dylan got it. So what would a want be? How would you define it?
Something that's luxury.
It's luxury. What else could it be? Non-necessity. Yeah. It makes things more fun in life. That's how I like to describe it. Wants make things just more enjoyable, a lot easier, gives us enjoyment. Okay? Will somebody read this slide to me, the heading? Sounds like something my kids would say, oh, come on, please. So this slide could easily refer to every one of us in this room, right? If not all people in the world. We have a limited amount of money available and an unlimited amount of things we need and want. So therefore, if you look at this little chart here, there's notice what's the biggest thing on here? Wants, the stuff I want. And what's the smallest one on here? Right. And unfortunately, this is real life right here. And then this is the stuff that you need and the stuff that you have money for. But notice that you've got to make a connection somewhere. So the simple answer is that we have to identify those things that we really need and then decide if there's money left over and with which, what are we going to purchase with it? So, and we have to get down to what do we really, really, really want. So in your packet, you have a handout, and it says needs versus wants activity. So if you'll pull that out, here's what you're going to do. Look for the needs versus wants sheet. What I want you to do is use this worksheet to write down some of your needs and wants, and then look carefully at what you've written down. So take just a minute and write down some of your needs and some of your wants that is basic to you. And I'm going to time you to do that for 1 minute. Now what I want you to do is, using the same list, what you've written down, I want you to carefully review what you've written down. Are the needs really needs, or can they be moved to the wants category? So think about that. And if so, go ahead and move it over to the wants category. Now, review your list and think about what's important to you and what has lasting value. So I always like to think of it this way. I'm going to get into my finance economics person. So if you buy something, there's opportunity cost associated with that. So does anyone know how to define opportunity cost? Come on. I know we've got some people who can talk about that. Anybody know how to describe opportunity cost?
Is that what you, I guess, like give up in order to?
You got it. Yes. So if I say, hey, Dylan, I really want to buy your phone, and how much are you going to charge me for it?
$1,000.
Okay. So I'm going to go and I'm like, hey, this phone is so cool. I'm willing to pay $1,000 for it. So what I did was I just spent $1,000, and now I've lost the opportunity to spend that $1,000 on something else. So every day we are making decisions that are economically based, that we are thinking, what is the opportunity cost? So if I'm buying this, I'm giving up the future decision to be able to buy something else. So always think of it this way. Whenever you're making a purchase, is it something that's going to have lasting value to you, where you're not going to have buyer's remorse later? Okay? So I want you to relook at your list, and I want you to put a star on anything on your paper that was a want that you feel like is very important, like this is a really big want for you. So put a star next to that one. Maybe it's a couple of things. And then I want you to cross off your least important want. So you're identifying your most important, and you're crossing off your least important want, the one that maybe won't have lasting value to you. So I would use an example of like eating out. Like I might be really hungry when I leave here today, and I may think, oh, I'm so hungry, I'm going to just stop somewhere and get food. And then, do you think it's going to have lasting value? Now, it could make me fatter, and it might have lasting value in that way, but the value is that once I've eaten it, I'm not excited about it anymore. It's met my need. So to me, that would be like a lower want, would be eating out. But if it's like going on a vacation, that's a want that I would probably put a star by. Does that make sense, what we're doing? It's just really helping you to identify for yourself what is a true want, what is just something that, hey, I really don't want to use my opportunity of my finances for this. I would rather let that one go and do something else. Okay. So identifying needs and wants is a major step in the journey to becoming financially independent and avoiding money traps. So without a clear sense of needs and wants, it's easier to fall into many, many potholes, okay? And you know what? These money potholes, they just want to jolt your finances. They just want to get you off track. And I don't want you to do that. And I know you don't want to do that. So let's look at the next slide. Raise your hands if you currently have any short or long-term goals that you're wanting to accomplish with your financial goals. How about that? Does anybody have any current short or long-term financial goals you want to accomplish? Dylan, you've got one? Justin's got one? Pay for college. Hey, that is a great one. A very good one. What's another? Does anybody else have a goal that you're willing to share? Justin?
Just paying my credit on time.
Paying your credit on time.
And in full.
And in full. Awesome. That's a great goal. That's his short-term goal. And anybody else have one? Ah, that's a good one. Money to put in her savings account. I like that. Very good. So we have another sheet with you that this is about financial goals. And on here, what you will do is I'm going to have you fill out one short-term financial goal. You've already given us one, Larissa, so that would be an easy one to use. Like she wants to have money to put into her savings account, but get real specific about how much money do you want to put in your savings, so you can get specific and by what date. And for Dylan, his is long-term to pay for college. And is it to pay for college and have no debt, so you can get even more specific?
Yes.
Awesome. So go ahead and take a minute and write one goal that you would like to accomplish, financial goal, because if we have goals, it helps us to stay on track and it gives us something to strive for. So your next steps to becoming financially independent is to have a monthly spending plan. And this is so important. So many people don't. As a matter of fact, only 40% of Americans budget every month. That means 60% of people do not budget. So if you want to become financially independent, I mean, seriously, just let's be honest here. How many of you had parents that you saw would sit down and do a budget every month and say, well, this is what we could afford. So we got 2 people. You know, nowadays, do you see parents do that? It's like money's kind of taboo. We just don't even talk about it. We just like don't want to have those discussions. And I remember this is how I was brought up, which is why I think I do what I do. My mom used to actually reconcile her bank account every month because they would send you your checks and you didn't have online banking back then. So you had to wait till the end of the month, and it was like the second week of the month you would get your bank statement in the mail, and then she would go through and see what cleared and how much money and make sure everything balanced. So I learned budgeting that way because that's how my mom did it. And so I say that because that is such a good habit to get into, is really figuring out what can you afford and planning it. We spend more time planning our vacation plans, making those plans, than we do sitting down and just making sure our finances are in order. So always think of it that way, because if you want to be financially independent in life and avoid these money potholes, make sure you've got a good handle on your finances. And the only way to have a really good handle on your finances is to have a spending plan in place where you know what's coming in and what's going out, and it just helps you to really get things in order. It's the best protection against the money traps, folks. And many people avoid budgeting because they claim that it takes too much time. Fortunately, for every student in the room, we actually have a tool that you can use online through the Spend Life Wisely, and I'm going to demo it right now. I'm going to actually have Justin come demo it. I'm going to get you over to it and show them the budget tool. So go to Tools, and then Budget. And let's just say, somebody name an income, any number, just a realistic monthly income, though. Don't say like $1 million, because I don't know anybody who has that kind of income.
Monthly income?
Yeah, just pick a monthly income.
$800.
Okay, $800. So the cool thing, if you notice, when he types in $800 under the monthly income, it's going to auto-populate these categories.
How much? I heard y'all say a number.
No, I was just saying, wow, y'all are college students, that's less than my house payment.
Oh, yeah. So if you notice that there's categories on here, they have charity, savings, but click on the More button on one of those. Let's just do by housing. Click More by housing. And notice it'll expand, and it'll tell you all the different things that would go into that category of expenses. So when you're adding that up, it will give you that. And notice that there's a percentage. It auto-populated based on a percentage. So this is the percent that the financial experts are saying, based upon your income, what you should be spending. So if you put that in, and let's just say here it was 800, what was the rent housing total come to? Did it say 200? So if you're spending more than 200, that could be a pain point for you. All that means is that, hey, you're going to be spending more of your income on housing than other people, so you're going to have to make adjustments in other areas so that you don't go broke faster. So I just like this tool. We're not going to go through everything, but you can take things away, you can add things, and the key is where it says remaining zero. That's what you're looking for, is make sure that the number comes to zero. This is a tool, again, that's available anytime, spendlifewisely.com, and it's a great way to do a quick and easy budget for free. All right, we'll go back to our presentation. All right, it does weird things. Okay. Thank you. I'm going to get it over here. Okay, so I'm going to tell you about another one that is my favorite that I actually truly use, and it's my budget go-to app. It's called Mint, and you can download it for free on your smartphone, mint.com. On your handouts that you have, it actually has it written down at the top of the notes-taking page. So it says on there, spendlifewisely.com and Mint. With Mint, I have my budget, and I love it because it tracks, and I can have all of my information uploaded in one place. It's an Intuit Quicken product, so it makes it very easy to use it. I'm going to show you one quick video that I just love because I I think it really puts everything we've talked about today into perspective, so you can know how to avoid those 10 money potholes that we've talked about. Here we go.
There's a lot of bad habits in life. Everything from being late to
How do you
biting
turn
your
that down?
nails, just bad habits. But when it comes to money, there's a lot of bad habits, but there's one worst habit ever. It's a habit that many people struggle with, not having a plan for your money. So many people just coast through life / possibly crash in life when it comes to their money because they have no idea what the
Hold on, it's way too loud. Sorry.
There's a lot of bad habits in life. Everything from being late to biting your nails, just bad habits. But when it comes to money, there's a lot of bad habits, but there's one worst habit ever.
Let's do it from here.
Or do it. No plan, no idea. So listen, you have got to break that habit because when you don't have a plan for your money, you end up wandering into debt. And those of you that have gotten into debt, this may be your story. Well, I'll just get a credit card or two. We like that car, we'll get a car loan, sure, why not? Okay, yeah. And you look up in 9 months, what happened? How are we in so much debt? And you'll find that you can wander your way into debt, but you cannot wander your way out. It's really hard to get out of debt. It takes a lot of sacrifice, a lot of money, a lot of strength. It's doable, totally doable, but it's difficult. And that happens a lot when you don't have a plan. Also, you end up not saving money because a lot of things end up being priorities, like Taylor Swift concert tickets. And also, when you don't have a plan, you don't end up hitting your goals, which if you don't have a plan, you may not have goals anyways. But if you have this idea like, hey, we want to retire around this time in our life, we want to have this kind of house, we want to be in this school district, whatever it is, your goals are, what you want in life, they're probably not going to happen because you don't have a plan. You have got to get a plan for your money, which, honestly, is a budget. But what it does is it makes your life purposeful. You're living on purpose with your money, which is a budget, because it helps you stay out of debt because you know where all of your cash is going. It helps you save because it's actually written in the budget of where you're going to save money. And also you're able to weave in your goals throughout that budget. And I've realized when Winston and I are on a budget and have a plan for our money, it sets us up for today, tomorrow, and the long haul.
So, she really stated everything that I've been saying, right? That was Rachel Cruz. This is actually Dave Ramsey's daughter. So, I actually went out there and utilized one of her videos, and so you're going to hear her use and state a lot of her father's philosophies in her videos. So, all right, you have one last thing to do is take the quiz and make sure that you did a pre-one. Now just do it again and see if you've learned anything based upon what we've covered. And I just want to quickly state that here's what we've talked about today. Money potholes are easy things to fall into. They're just traps that can really suck away your income. And if you're not prepared in life, you will not be able to avoid those money potholes. And I want you to be prepared. And we talked about ways to be prepared. You got to make sure you know your needs versus your wants and realize that there are choices that we can make and that there's opportunity cost associated with those wants and needs. Put a spending plan in place because it is so important. It'll help you throughout your life. Be part of the 40%, not part of the 60%. And budgeting is the best way to avoid money potholes. And there's many free resources out there for money management. And go utilize those resources. It makes it so much easier. It can save you time. And it's just the best return on your investment that you'll have, because I don't want you to be stressed about money and have a lot of unnecessary things when there's so many things out there. So what questions do you have about anything that we've talked about? Nothing? Anything? So here's what I want to challenge each of you to do. Go in and identify your needs versus your wants. You have those papers. Set some financial goals for yourselves because you always have to be striving for something. Create a monthly spending plan. Track your expenses with an app such as Mint, and avoid money traps. And make sure you tell your friends and your family members, your relatives, everybody that, hey, you do not want them to get into these money traps. Okay, we're going to do a gift card drawing for our winner. If you'll turn in the other thing, and I'm going to end it with...
Can I also let them know, she gave you guys the Spend Life Wisely app. We are also members of cashcourse.org. So our institution has a cashcourse.org account, so you can use your student at se.edu is a lot of her worksheets
Mhm.
that she uses. They've got a lot of worksheets on there that are very helpful.
Yes, absolutely. So yes, please use the cash course, use anything. The resources are available, they're so easy.